The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Green. Russian President Vladimir Putin has agreed to a proposal by U.S. President Donald Trump for Russia and Ukraine to stop hitting each other's energy infrastructure for 30 days and gave a corresponding order to the Russian military. The Kremlin said in a statement that Putin and U.S. President Trump had a detailed and frank exchange of views on Ukraine during a phone call in which Putin had said that the resolution of the conflict must be comprehensive, sustainable, and long-term, taking into account Russia's own security interests and the root causes of the war. The White House said talks to achieve that goal will begin immediately. Trump said his call with the Russian leader Tuesday was very good and productive, and that the two leaders discussed many elements of a peace deal for Ukraine. For his part, President Volodymyr Zelensky said Ukraine would support a U.S. proposal to stop strikes on Russian energy infrastructure and that he hoped to speak to Trump about his phone call with Putin.
We support all steps aimed at ending the war. We will support them, but in order to support them, we need to understand what exactly we support. When President Trump has time, he is a busy man. When he has time, he can call me anytime. He has my phone number. We are ready to talk through further steps, with pleasure. We are skeptical when it comes to trusting the Russians. There is no trust in Putin. That's why I'm saying we need to understand how it will work technically so that it will not depend on their will alone. That is it.
Ukraine's energy infrastructure has been the target of large-scale attacks since Russia's invasion in 2022, resulting in blackouts and freezing conditions for millions of people. The Council on Foreign Relations Liana Fix said it was unusual for world leaders to engage so early on in a negotiation process.
The encouraging thing was that they are talking. It seems to have been a productive conversation. It certainly went on for a long time. There's no indication of any rancor, so that's good. The disappointing part is that there's no 30-day ceasefire. That's what had been on the table before. Ukraine had agreed to that. There's a ceasefire against energy targets and infrastructure. There's a commitment to look at a maritime ceasefire in the Black Sea, then maybe a longer ceasefire, and then, of course, a full peace settlement. But the shooting on the front lines will continue.
The minimum that can be achieved here is a ceasefire. And what we already see now is that the Russian side is trying to buy time. It has not agreed to an unconditional ceasefire. Vladimir Putin himself has not agreed to. And he sees benefits for Russia through direct interaction with President Trump. And demanding that he would agree to an unconditional ceasefire, he only has to discuss some things with President Trump himself, gives him an access which he knows is usually beneficial for the Russian side. So he is getting all the benefits of trying to prolong and to stall the implementation of a ceasefire. We are likely to see this continuing a Russian suggestion that they are really close to agreeing to a ceasefire, but before issue X and issue Z on the U.S.-Russian agenda has to be resolved.
Meanwhile, oil prices slid on Wednesday after Russia agreed to U.S. President Trump's proposal that Moscow and Kyiv stop attacking each other's energy infrastructure temporarily, which could lead to more Russian oil entering global markets. Brent crude futures were down 0.3% and $70.35 a barrel. U.S. West Texas Intermediate crude also lost 0.3% to $66.64. Dubai crude gave up 0.2% to $71.57 per barrel. Russia is one of the world's top oil producers, but its output has waned since the beginning of the war, which resulted in sanctions on Russian energy. Analysts said a potential ceasefire could lead to an easing of sanctions, which might raise oil supply and ease prices. But the declines in oil prices were limited by ongoing turmoil in the Middle East. Gold prices rose to a fresh record high on Tuesday as rising tensions in that region and trade uncertainties due to U.S. President Trump's tariff plans fueled demand for the safe haven asset. Spot gold hit a peak of $3,038.26 per ounce, climbing further above the $3,000 hit for the first time just last March 14th. Asian stocks were subdued on Wednesday as economic worries and a shifting geopolitical landscape kept risk appetite in check. Following declines on Wall Street after a sell-off in technology stocks picked up pace, Japan's benchmark Nikkei 225 will last seen up about 0.2%. That's after the Bank of Japan held interest rates steady at 0.5%, in line with expectations. The central bank weighed the potential impact of U.S. President Trump's tariffs. In South Korea, the Kospi index advanced almost 1%, but Australia's ASX 200 fell about 0.3%, with the Chinese markets generally flat. The focus has also been on Indonesian stocks after the stock market there clocked its sharpest fall in nearly 3 years on Tuesday on concerns over the government's fiscal strategy and the nation's growth prospects. Jakarta's benchmark stock index is down 3.5% for the day, 12% so far this year, putting it near the bottom of the pack in Asia. Samsung Electronics is looking at major deals to drive growth after its failure to ride an artificial intelligence boom made it one of the worst performing tech stocks last year. Samsung's co-CEO Han Jong-hee told investors that 2025 would be a difficult year because of uncertainties surrounding economic policies in major economies, and that Samsung would pursue meaningful mergers and acquisitions to drive growth. The South Korean firm has been suffering from weak earnings and sagging share prices in recent quarters after falling behind rivals in advanced memory chips and contract chip manufacturing, which have enjoyed strong demand from AI projects. Shareholders slammed management for poor stock performance and called for measures to revive stock prices at the meeting. AI chip giant Nvidia unveils new products at its annual software developer conference. Among the highlights, the new Isaac Groot N1, billed as the world's first open humanoid robot foundation model. Nvidia says it is also developing an open-source physics engine with Google DeepMind and Disney Research to advance robot learning development. The company also announced new chips, including one that has more memory and can support larger AI models.
Computer companies all over the world are ramping these incredible machines at scale. And I'm just so pleased and so grateful that all of you worked hard on transitioning into this new architecture. And now, in the second half of this year, we'll easily transition into the upgrade. So we have the Blackwell Ultra NVLink 72. It's 1.5 times more FLOPS. It's got a new instruction for attention. It's 1.5 times more memory. All that memory is useful for things like KV cache. It's 2 times more bandwidth, okay, for networking bandwidth. And so now that we have the same architecture, we'll just kind of gracefully glide into that.
One conference goer described the atmosphere as insane, comparing it to a Taylor Swift concert. Nvidia's big money-making chips face pressure from technological change as AI markets shift from training AI models, such as chatbots, on huge troves of data, to make them smart, to inference, which is when the model uses its intelligence to produce answers for users.
And being here, I think, really opens your eyes into what's, we're just seeing the very, very tip of the iceberg. And there's a whole lot underneath that still has to surface now, and we're seeing it in all sorts of applications like robotics and the like that we just described. And those things are even unimaginable where we are. Country with 120 million people, mostly in manual type situations. But it's going to be a real interesting in how this will impact the rest of the world as it radiates from GTC.
The final stretch from a delivery truck to a customer's door, known in the logistics industry as the last mile, is often one of the most time and labor-intensive parts of the job for delivery drivers around the world. River, a robotics company from Switzerland, showcased a robot designed to tackle that job. The robot, named Milo, is designed to independently travel from a delivery truck to a customer's doorstep.
Very exhausting job. So what we are building is like an augmenting that workflow by having a robot that covers some of these miles so the driver can focus on other things. The driver will park, the driver takes care of whatever is inside the van, hands it over to the robot, and the robot goes, delivers it, comes back, and they go to the next location. And in the meantime, the driver can either like sort packages in the back, they can do parallel deliveries, because a lot of these stops you have to go to multiple locations at once, or the driver can take a rest or chit-chat with the neighbors.
River robots are already making deliveries to real-world customers in Switzerland, and Bilyonaryo says the company's eyeing expansion in the U.S. to cities including San Francisco and Boston. American senior citizens are expressing concerns about their retirement plans in light of market volatility and the policies of the administration of President Donald Trump. Some are retirees and saying they're forced to keep working because their Social Security does not cover their expenses. Others who had been saving for retirement for over 2 decades have already seen tens of thousands of dollars in losses in their investments. Still others are restructuring their retirement portfolio to shift from U.S. bonds to Asian stocks.
We have a monthly review of our financial position. So every first of the month, my wife and I sit down and review things. We've lost $70,000 between January and February in our retirement accounts. That makes me nervous.
A lot of folks will say that some of the biggest jumps, positive jumps in the market happen right after a quick drop. So there are opportunities you might lose if you move to cash, but there's also potential markets might continue down. And so for me, I'm not retiring right now, but I'm getting close, and I can't afford to lose, 50% of my nest egg. So anyways, it's definitely appropriate to be concerned and to think about what your portfolio looks like.
Well, it definitely affects upcoming future plans for retirement. We probably lost a good chunk of our retirement savings just in these past few days. I know probably a lot of other people at my age thinking about retirement are probably watching it very closely too. I've got 2 kids in their 20s who are really watching it because their economic freedom and independence will rely on that and them getting jobs and being able to make their way. So yeah, we're watching it closely. The economics of tariffs on goods and services that we use seems a little silly to me. I don't know what precipitated it. It seems like it's somebody just out for revenge and to, get attention. I don't think that they're things that work.
U.S. Treasury Secretary Scott Bessent believes Trump's policies on trade, taxes, and deregulation will lead to a, quote, transition rather than a crisis, though he acknowledged the possibility of a recession. Air France on Tuesday has unveiled a new first-class suite as it expands efforts to lure wealthy travelers from business jets and lend a French touch to the tussle for premium revenue. The CEO of parent Air France KLM told Reuters the unspecified investment aimed to place Air France at the top of the European League in airline luxury, signaling a battle with British Airways and Lufthansa. The air travel industry is locked in a battle for high fare-paying customers as it recovers from the pandemic, but is split over the value of investing in first class, with many carriers focusing on steady improvements in business class seating. Smith declined to say how much the investment in the new seats would cost, but The airline says its first-class service is already profitable, in part because the price of the ticket has risen in recent years.
Paris is a great market. Paris is a leisure market, it's a business market, it's a luxury market. The brand Air France has a history of having a luxury component to it, so we are legitimate. 92 years old, we have a lot of history with the Constellation, 707, 747, Concorde, so a lot of experience in this. And also French touch, which is really something unique in many aspects of our service, is something that we leverage. And it's something our customers look for, it's something that we can take advantage of. And I would say, why are some airlines not able, from our view, why they're not able to keep this up, is it's tough, because it's not just on board with seats, it's got to be the service, it has to be what's on the ground, and that part is difficult to replicate. And if you're not doing it from end to end, it's very hard to get customers to feel comfortable or justify or feel they're getting value for money in paying what is necessary for this to be profitable. So I think it's the ability to put out a product that customers look for and are expecting and that is consistent.
According to the Air France website, an average first-class, one-way Paris-New York ticket costs around 10,000 euros in May. We have to pause for a few reminders, but the biggest business stories from around the country and markets closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. DMCI Chairman Isidro Consunji spoke to business leaders in SharePhil's first general membership meeting today. Details from our correspondent Sujin Kim, who joins us on the line from Makati City. Sujin, go ahead.
Yes, Raine. DMCI Holdings Chairman and President Isidro Consunji has yet to name his successor, but confirms he is considering several candidates. Speaking before industry leaders, Consunji stressed the complexity of succession planning, calling it a crucial decision that goes beyond experience and credentials. He underscored the challenges involved, from structural continuity and long-term development to expertise and core values. He expressed confidence in DMCI's foundation and vowed to ensure a seamless leadership transition when the time comes. Meanwhile, the Shareholders Association of the Philippines brushes off concerns over political uncertainty amid controversies involving former President Rodrigo Duterte. SharePhil Chairperson Maria Garcia asserts that the business community remains resilient, saying companies will continue to operate and adapt regardless of political noise. She expressed confidence that the business leaders can handle issues intelligently and peacefully. And those are latest updates from Makati City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. The Philippine economy is expected to reach the lower end of the government's target of 6 to 8% for this year and next year. That's according to the Bangko Sentral ng Pilipinas, or BSP, in the latest monetary policy report. The central bank explains this is due to elevated global commodity prices and trade uncertainties. Last year, the Philippine gross domestic product expanded by 5.6%, lower than the 6 to 6.5% full-year target range set by the Development Budget Coordination Committee, or DBCC. The government's budget surplus shrinks to 68.4 billion pesos in January. That's as public spending accelerated during the period. Data from the Bureau of Treasury shows this is lower than the 88 billion pesos surplus recorded in the same month last year. The nearly 20% jump in government spending, totaling almost 400 billion pesos, was driven by infrastructure projects, health and social protection programs, and preparations for the midterm 2025 elections. Accelerated government spending could boost economic growth, but a shrinking budget surplus raises questions about fiscal sustainability. With the revenue collection under pressure, the government will need to balance spending with debt management to maintain a stable fiscal position. Malacanang says it will be up to the Anti-Money Laundering Council to decide whether to freeze the assets of former President Rodrigo Duterte if requested by the International Criminal Court. Communications Office Undersecretary Claire Castro confirms that the AMLC has full authority over such decisions and will determine the next steps. She also states that the government remains committed to ensuring reparations for victims of Duterte's war on drugs. This case puts the spotlight on the country's financial regulatory systems, testing the independence of the AMLC or AMLAC, the government's handling of high-profile financial investigations. The Philippines successfully removed from the FATF gray list. Focus now shifts to maintaining global confidence in its anti-money laundering framework. Now, how government response could impact foreign investor sentiment, cross-border transactions, and the country's long-term reputation as a secure financial market. Businesses will be monitoring whether this case triggers any broader political or rather policy changes in financial regulation or international cooperation. The Department of Agriculture is moving to file legal action against agricultural smugglers, intensifying the government's crackdown on illegal imports. Agriculture Secretary Francisco Tiu Laurel Jr. confirmed this following a complaint filed by the Bureau of Plant Industry against JRA and Pearl Enterprises, a firm allegedly responsible for smuggling 2.37 million pesos worth of fresh yellow onions from China. The shipment arrived at Manila South Harbor in July last year without the required sanitary and phytosanitary import clearances. Laurel says the DA is preparing similar charges against the company and vows to strengthen the government's anti-smuggling drive. Illegal agricultural imports undercut local producers and distort market prices, impacting both farmers and legitimate importers who follow regulations. Government's tougher stance signals tighter enforcement, which could stabilize supply chains and protect the local industry, but it also raises questions about how stricter trade oversight may affect import costs and market access for compliant businesses. The Philippines is ramping up its public-private partnership projects with 176 projects totaling 2.5 trillion pesos in the pipeline. PPP Center Deputy Executive Director Jeffrey Manalo says the projects are at different stages, some still in feasibility studies, while others are awaiting approval or already in procurement. Of the 176 projects, 12 are currently under procurement, while 22 are in negotiations with private proponents. The government is working to streamline the PPP process under the new PPP code, which cuts project approval timelines from 18 months to just 120 days.
Of the 176, there are about 12 projects, both national and local PPP projects that are currently under procurement. 10 of them are in the approval stage, meaning we are trying to secure the green light so that we could start the selection of our private sector partner. 22 are undergoing negotiation with the unsolicited proposal proponents. This means we are finalizing the terms of the PPP contracts before we secure an approval from the appropriate approving body. And a good 131 of these projects are in relatively earlier stages.
The Philippines moves up in economic freedom, now classified as a moderately free economy. Data from the Heritage Foundation's Global Index on Economic Freedom shows the Philippines ranks 82nd out of 184 countries this year with a score of 60.6. That's an improvement from 88th place last year when it was categorized as mostly unfree. The think tank notes that the Philippine economy continues to expand despite global challenges. Government reforms have helped improve business conditions and strengthen the private sector. The higher ranking signals progress in making the economy more business-friendly, but corruption remains a major roadblock to long-term growth. The challenge is to build on these gains and ensure economic freedom translates to more investments, more jobs, and sustainable development. Onto the market now. Philippine shares swing back to positive territory and the 6,300 level. The main index added about 0.5% to finish Wednesday at 63.13. The gains seem to have conviction, with advancers outweighing decliners 93 to 88. Value turnover reaching a hefty 7.84 billion pesos. Among the sectors, financials and industrials pulled up the market, with BPI and BDO leading the charge. Meanwhile, the foreign exchange market, the peso is currently trading at 57 pesos and 25 centavos to the US dollar, stronger than Tuesday's close of 57.30. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on top.